Good evening and a warm welcome to everyone. Over the last 2 weeks, I have been running a system on Twitter by sharing my TradingView screen, which is primarily the OCA and the auto AVWAP. Now, if you have seen the chart, it looks something like this. So this is the screen share which you have been having. Now, after running it for 2 weeks, I have received a few questions. So in this video, I will try to answer that and just tell you what this is all about. Number one, people of like us who are trading futures and options, whether on the indices or on stocks, as of now, the Indian market is in such a scenario that more than futures, the options volume is multifold. So classically, futures is basically the dog and options market is the tail that we knew. But now the option market size has simply exploded. So as of now, the options market is basically the dog and the futures is basically the tail. That means depending upon positions in the options market, the futures is actually moving rather than the other way around, which is the classical theory. So if a person tries to analyze the option chain, maybe on an end of day basis, he has enough time to do it. But in real time trading, when you are trying to analyze an option chain, the problem becomes like this. This is a standard option chain. And if you notice, there are various strike prices. All of us know this. Now, to analyze whether this chain is bullish or bearish, first of all, we need to see what is the OI on each side. This is on the put side and this is on the call side. Then we need to see what is the change of OI taking place on each and every strike. So if I'm looking at 24,350 strike, maybe I'm studying this. Third, we need to have a look at the IV, where the IVs are. Fourth, we need to have a change, how the IVs are changing. Fifth, somebody might be looking at delta. Sixth, if you are on expiry day, you have to look at gamma. For an option seller who is selling options, theta also becomes another point. Now, this whole screen has to be analyzed in real time, and there are a lot of strikes, right? So humanly, it's not possible. If you have to take a decision based on this chain in real time, it gets very, very difficult. Now, a lot of softwares offer a feature like this also. Here, what is happening is, if I just switch it one by one, you will understand. I have the total call change volume. This is actually the Y change. I can also look at the total Y volume. But people generally look at the Y change. I have the put Y change volume. I have the difference in their change. I can also have a look at the PCR, forget the VWAP as of now. So looking at these lines, again in real time, I've got to analyze how fast this is moving, right? And there's another problem when you are analyzing the OI from the exchange side, because it's always 3.5 minutes late. So by the time you are analyzing the OI and taking a decision, that price point or that data point actually for OI is already like 4 minutes ago it has happened. So you are taking a decision always a bit late. Now everybody gets this data late. It's not that somebody is getting it faster. So the problem is, I also taught OI analysis in this way because this was the only method. Now, from 1.5 months back, TradingView has started totally posting the OI chain on their site. If you do not know it, it looks something like this. If you open the TradingView first page, if you go to the products, you can see this options beta, right? If you go to the option, you can see the whole option chain. This is the Nifty option chain which is there. And all this data can be called through different coding strategies which are already available in TradingView. You can call the chain, you can call the volatility, everything is there. So whatever data you need, it's already there on TradingView. Why we are using a proprietary methodology to kind of substitute OI and replicate what actually the OI is doing. So based upon all this, what happens is, now if you're going to analyze the Nifty, and there's another issue also, if you are trading the Nifty or Nifty futures and you want to also check the chain, you have to continuously switch between different windows, right? And there's also, if you have another laptop, you actually have the trading terminal where you need to put on the trades. So in order to make life easy, what we have done is, we have simply made an indicator called Quantum Option Chains Analyzer. So if you just click it, this will come and you have to just click on the chart. Once you click on the chart, an indicator appears below. What is happening out here is, this particular algorithm is analyzing the whole chain and just giving you a bullish or a bearish view. You will see multiple colors out here. If it is deeply bullish, and there are 2 points above, this is at 68 and this is at 96, Below you have minus 68 and minus 96. Now if you are a student of statistics or anything quantitative, you will understand this is just 1 SD and 2 SD points which are plotted on the particular chain. So what this does is it gives you a probabilistic assumption what the chain is actually telling to you. So rather than analyzing the whole chain, looking at IVs, looking at OIs, looking at change in OIs, looking at strikes, everything is taken accounted for this algorithm, and it gives you a bullish and bearish view. Simply speaking, if it is deeply bullish, deeply blue, it's bullish. If it is deeply red, it's bearish. Most important points are the change of trend on this particular chain. When I say change of trend, I mean something like this. From bullish, it turned to bearish. Let us see where this happened. This particular bar. And you can see Nifty fell after that. Or here, from bearish, it went up to bullish. Now, you might say, why I am not concentrating on this? This actually did not go up to 2 SD, that is 96. Here it actually went up. So despite Friday market being down, at this point you are motamoti sure that market is probably going to go up. Now this is on Nifty and it just drew automatically as you see. I can also draw it one more time. You will see why this will differ. I have the same indicator. Now the indicator has a settings part. The option code is taken directly from this stock. It can be automatic. You can also write Nifty here. ATM is taken when I'm clicking on this part. Strike step is 50. That is at what distance strikes are located. This is your expiry date, year, month, and this is the date. Now Nifty has an expiry weekly on 11th of July. So now on your chart what you have is this is the analysis of the weekly chain and this is the analysis of the monthly chain. You will see they vary very slightly, right? But so just by these two indicators, you can continuously analyze what is happening on the weekly chain and what is happening on the monthly chain. Now this is on Nifty. If I simply do this on Bank Nifty, this indicator does not, okay, just give it a second. This indicator appears out here. What happens out here is you need to change this because this is already on Nifty if you have changed. So this becomes Bank Nifty. This becomes like 50 to 600. Your strike strip on Bank Nifty is 100. Your weekly expiry is on 10th. Okay. So this will be the Bank Nifty weekly chain analysis. And if you are doing it on monthly, again, Bank Nifty. $50 to 600. This one is 100. This is your expiry date on 31st July, right? So this is your monthly Bank Nifty option chain analysis. So rather than looking at the whole chain, this whole data, or even looking at this, on your chart you can easily understand whether the particular index is bullish or bearish. Now other than this, we can also do this on a stock. Let me show you how. Let us say I want to look at HDFC Bank. This is HDFC Bank. Now let us say I want to study the option chain somewhere around here, this particular place. Here your ATM is something like 1780, right? So this is your ATM. I just am clicking here. I need to change this. This is 1780. And if you look at the HDFC option chain, I need a difference in strikes. So HDFC options are like 1650, 1660, 1670. So the difference in strike is basically 10 points, not 50 points. So from here, the point where I was analyzing HDFC Bank, as I said, say somewhere around here, HDFC Bank started going bearish and it is totally bearish here. Now the point is, as we are coming down, say if we are here, your ETM has changed to 1740. So here manually what I have to do is just change this to 1740, rest of the things remaining the same. Not that bearish, turns major bearish out here. right? And now let us come to yesterday, what's happening out here. Say somewhere around here. Your ATM is like 1650. So I change this. 1650. Yeah, it's still bearish, not major change anything. If I look at another stock, let us say ITC. This is still showing HDFC Bank actually. So what you have to do is ITC. This is like 433. So your nearest strike is 432.50 and this one is 2.5. Yeah, ITC is bullish. In fact, yesterday when the market opened, yesterday was 5th of July, your ATM was like 430. So I will just change and see what happened since morning. It will almost be the same. Yeah. If I look at it from the morning, this was kind of neutral, then bullish, did not go to 2SD. Bearish here, actually it told you that a major buying was taking place. Continuously bullish, continuously above 1SD. And then it started to zoom up. So if you are in ITC and if you are here, you might be looking at a buy side signal and looking at a bullish bias kind of thing. Now this is not the only indicator which is there. We also have something. Let me shift back to Nifty. Again, I will change this. In fact, you very easily get an idea of what's going on. Yeah. And when you are actually trading according to this, here. So this indicator set comes around here. You have the AVWAPs drawn automatically by the software. It picks up the intermediate high and low, the pivot highs and lows, and draws the AVWAPs. It also changes the background color to red and green depending upon another logic which tells you whether the stock is generally bullish or bearish. It also gives you buy and sell signals with stop loss. There are two kinds of buy sells. One is normal buy sell and one is a pullback buy sell. If I just show you in for a second, here what I'm trying to do is I will just put this trend buy sells off. And so you get something like here called a pullback buy. So this kind of is much more strong signal than a normal buy. So here what happens is after a market, it kind of sells up and then rebounds. On this pullback, it gives you a sell, right? This is a buy side, then a pullback, it gives you a buy. Buy side, then a pullback gives you a buy. This gets stopped off, obviously. This is a sell, then it goes up, then it gives you a pullback sell, then it comes down. Here it gave you some pullback buys. It got stopped at a very small element. Anyway, so this is the whole system which actually works. And I generally wanted to do this video because people said that what the OCA is. And I believe this is India's first option chain indicator. That is, rather than analyzing the chain subjectively, depending upon how you understand the chain, what you have studied, what are the factors you are seeing, and doing this continuously with the trading day, this helps you to understand what is going on. And the chain is continuously changing. So if you are seeing the chain at 2 o'clock, you don't know what the chain was at 10 a.m., right? But here it tells you, even if you are at 2 o'clock, what the chain was saying to you at 10 o'clock. So these are the basic things on the software. Now in this particular course, you have 5 basic videos where all these setups rules are explained. I did this supremely briefly here. The videos are much more detailed, which will help you to understand how the trades come. Then over the last week after this course has been launched, I have analyzed each and every expiry. I've analyzed 3 expiries actually, Fin Nifty, Nifty and Bank Nifty. And post market, I've used the system, I've used the OCA, I've analyzed how the positions could have been taken and how the market behaved. Now I was also doing that on Twitter live. So if you're seeing this system on Twitter for the last 2 weeks and if you're interested, you can go through this course. I believe that if you're a day trader, whether in indices, whether in stocks, it will help you. Now, so far we have covered this for derivatives, but over the next week, see, the course is something like there are 5 basic videos and general revision videos over the last week. But this course will be expanded over the time frame that I will also include cash trading, day trading cash stocks. and day trading other things which you are there. So the setups which you're seeing now, some of the setups will also get added. The course will continuously evolve and the quantity of the classes will increase. Now initially when you pay, you get video access for 6 months. You can see all the videos for 6 months as many times as you like. The indicators access is for 6 months initially. Post 6 months, you have to renew the indicator because we are running some background APIs for which we need to pay some cost. The cost of the renewal is around 6,000 every 6 months. So plus GST. So ideally it's 1,000 rupees per month. I wanted to keep it extremely cheap and extremely affordable for all, right? And the initial course cost is 24,000 plus GST till Sunday, till tomorrow, 7th July. For the early birds, it's available at a discount of 50%. So you get 12,000 plus GST, 14,000 something would be amount. Post Sunday night, midnight, the course fee will increase, the discount will get down. So if you're interested, I believe is the ideal time you can go for this course and just see how this works in your own trading. Now, if you are already a trader who has a technical trading system with you on charts, if you're doing that, I believe you have it. What you can do is you can use this indicator as it is along with your normal chart setup. So this will provide you an extra layer of confirmation from the option chain. So that should also be a huge help. This course is equally effective for buyers as well as sellers. For example, we are looking at the course from a buyer's angle, but if we look at it from a seller's angle and say I want to sell, I don't even need the buy sell signals. What I need is say you're one of the sellers who like to sell and hold for 4-5 hours on an intraday basis. So this is your chart. So if you're here, you can come out here, and since this is bullish, say Nifty is at like 24,240, this is at 24,150. You sell the 150 put because this is above the VWAP. These rules are there how to understand this is bullish. And then you can sell a put, or where you think it is bearish, you can go out and sell a call. For example, this particular zone is totally bearish, right? Let's see. I will just mark two zones out here for you to understand. Say this particular zone. This is where you should be selling calls. And this particular zone. This is where you should be selling puts. So if you start selling puts out here, if it goes up, the put continuously decreases. So if you're a weekly option seller, this will give you an extra bit of edge in your selling intraday on a directional selling point of view. To select your strikes, whether you will sell a spread, whether you will sell naked, depends upon your knowledge. This just helps you to understand the direction which way the market is going so that you can put your trades on that side. So this was just a brief introduction. This is not the training as such. Training is around 3 to 3.5 hours. It's within the course. So if you're interested, in the description box, I have given the link of the course and the discount code. Remember, till 7th July, that is tomorrow Sunday, it's available at a 50% discount. Post that, the price will increase. Thank you for attending this particular session. If you have any questions, my Twitter DMs are open. You can ask me any question on Twitter DM, or you can email me at quantgym@gmail.com. Any queries, anything which is in your mind, please clear those before subscribing. Okay? Thank you.